Well, hello, everyone, and welcome. This is Cynthia Tomain with Interactive Brokers, and thank you for joining today's webinar being brought to us by Davis Research. I'm very pleased to have Amy Lubas with us today. She's a CFA and advisory strategist for Ned Davis Research. So with that, I'm going to go ahead and pass the controls over to Amy. So if you can go ahead and share your screen, we'll get underway here today. Thanks for joining us, Amy.
Thank you, Cynthia. Hello and welcome to the Ned Davis Research webinar, How Sentiment Can Impact Your Portfolio. First, I'm going to start with a little bit of a background on myself. I've been in 3 years, and I've been at Ned Davis Research for the past 15 years, and am currently the firm's advisory strategist. That means I'm responsible for NDR's products that are geared toward advisors and wealth managers, including NDR's advisory publications offering, which is available on the Interactive Brokers platform under account management. Now a little bit of background on Ned Davis Research. NDR uses what we call the weight of the evidence and a 360-degree approach to build up to market insights and calm investors in a world full of bull and bear news hype and hysteria. When we say evidence, we mean data from more than 200 vendors, with some data series that go back over 100 years to fuel a historical perspective and build proprietary indicators and models. We believe that no client is too big or too small to benefit from our insights. In 1980, Ned Davis himself founded a new investment research group based on his fundamental belief that making money was more important than being right. Today, we are widely recognized for our concise commentary and unbiased views. NDR is headquartered in Venice, Florida, and we have offices in Atlanta, Boston, London, Hong Kong, and San Francisco. Interactive Brokers clients can sign up for a free trial of NDR's advisory publications in account management. Let me explain a little bit more about our 360-degree approach. It is what we call a multidisciplined approach and incorporates macro and fundamentals as well as technicals and sentiment. And you can see that sentiment is a key area for us at NDR and fits into what we define as how the market is acting versus how it should be acting. Today, my goal is to accomplish the following. First, I will discuss some sentiment measures in the marketplace and provide some examples. Then I will provide some techniques to improve on sentiment analysis. I'll discuss the concept of the cycle of market sentiment and how sentiment can impact your portfolio. I'll conclude with some comments on what else to monitor for your investment decision. And finally, I will take your questions. So let's get started with sentiment. There are numerous ways to measure sentiment. In fact, crowd psychology is a bigger subject than just what people think about the stock market. It goes to actually the whole general mood of society. So for instance, there are measures, things like consumer confidence, which measures what people think the economy is going to do. Of course, the economic backdrop is important to the stock market as it drives earnings and thus drives stock prices. On this slide, I list some additional measures of sentiment. Things like investor polling, asset flows, market-based measures. Those include things like market breadth, volume, and valuations, and finally, derivative data. On the next few slides, I'm going to review some of these examples. Investor polling. There are several different surveys of investors available. For example, the American Association of Individual Investors does a weekly survey of 125 individual investors who are asked whether they are bullish, bearish, or neutral on the direction of the stock market over the next 6 months. At extremes in opinion, as indicated here on the slide with the yellow circle, the stock market majority is usually wrong. The indicator is calculated by taking the ratio of bulls to bulls plus bears. The ratio eliminates neutral responders to focus on those with strong market views. A top in the market is usually associated with the point of maximum optimism and a bottom with the point of maximum pessimism. When the entire crowd is on one side of the fence, the wise investor historically has been better off being on the other side. Market-based examples. As I mentioned, while this encompasses stock market breadth, volume, and even valuation, one of the most widely followed sentiment measures is the VIX, which is shown on this slide. Created by the Chicago Board Options Exchange, the Volatility Index, or VIX, is a real-time market index that represents the market's expectation of 30-day forward-looking volatility. Derived from the price inputs of the S&P 500 index options, it provides a measure of market risk and investor sentiment. It is also known by other names such as the fear gauge or fear index. Our analysis has shown that when the VIX reaches 28.5 or higher, the S&P 500 has historically suffered losses of 20% or more over the following 9 months on average. Asset flows. There are firms that capture investment flows into mutual funds and ETFs, which can help gauge investor sentiment. This chart shows how the tech sector weight rose in the S&P 500 index as investors piled into the sector during the dot-com era. When it hit extreme levels in March of 2000, as indicated by the yellow circles on this slide, basically it was creating a bubble. And here liquidity dries up and there's no one left to buy. Everyone is thinking the same thing, and buying the same stocks is a problem when trouble strikes. So in the next few slides, I'll review some techniques to improve the performance of sentiment indicators. First, creating a sentiment composite. Combining several different types of indicators and creating a composite reduces risk and develops a balanced perspective. Just as I mentioned before with NDR's weight of the evidence approach, we incorporate the same philosophy with our sentiment analysis. The NDR daily trading sentiment composite shown here is comprised of over 17 daily and weekly indicator readings. The indicators have been selected from investor surveys, asset flows, overbought, oversold indicators, valuation, volatility, and put-call areas of market analysis. Peaks and reversals in sentiment can often, but not always, identify opportunities or risks. For instance, the first yellow circle on this chart in January 2018 aligned with a short-term market peak as a modest correction ensued into early February. However, the second yellow circle in June 2018 was early, but identified risk to the market. If you remember, the stock market then dropped nearly 20% in the fourth quarter of last year. The third circle in December of 2018 identified a bullish trading opportunity as the stock market rallied into the May 2019 high. The next example is looking at historical and recent behavior. Using the same composite as shown on the prior slide, we illustrate here the importance of looking at the historical and recent behavior of an indicator. The chart shows the indicator readings around the time of the financial crisis and what the reading was at the secular market low in March 2009. The first sentiment peak noted in the chart shows a rally in November of 2018, providing an opportunity to sell into rallies. The second peak in January of 2009 was a rally off the lows, but optimism kicked in prior to the 3-month decline to the ultimate low in March 2009. The new secular bull market in stocks began at that time. The thrust in the market changed the behavior for sentiment indicators. The bottom line is sentiment indicators can behave differently in different stock market environments. Comparing different asset classes. For example, the chart here shows the spread between stock market sentiment and bond market sentiment. The yellow circles highlight peaks and troughs in relative sentiment. When the spread gets stretched in one direction, it can be a sign of a risk or opportunity in a particular asset class. Our analysis has shown that above the 22.5 level, the stock-bond ratio is down nearly 20% per annum since 1984. Below the 23.5 level, the stock-bond ratio is up 26% per annum since 1984 and up 33% per annum since 2010. The cycle of market sentiment. The graphic on this slide illustrates that investor sentiment typically goes through a cycle. Sentiment can rise from lows with optimism until it reaches a level of euphoria. And when it gets to an extreme level and something changes in the marketplace, it presents a risk to that market. A catalyst will typically start to erode that optimism. And that erosion can pick up to the downside and swing the pendulum all the way to extreme pessimism, which then provides an opportunity in that market. And then the cycle repeats itself. So fear, greed, and hope are constant factors in market trends. So how can this impact your portfolio? At Ned Davis Research, we have a saying, beware of the crowd at extremes. The meaning of this in general is we recommend to follow the crowd in a certain direction. But when it gets to an extreme and reverses, you actually want to be a contrarian investor and do the opposite of what the crowd is doing. One of the biggest examples of this was during the Great Recession of 2007 to 2009. By the time March 2009 rolled around, investor sentiment, as calculated by NDR's intermediate term composite called the NDR Crowd Sentiment Poll, had dropped to its lowest level in history, which presented an incredible buying opportunity for stocks over the last decade. Before we wrap up, I want to point out that sentiment is just one piece of the puzzle for determining the opportunity or risk of a particular asset, whether that be an index like the S&P 500 or even an individual security. Macroeconomics, fundamentals, and technicals also matter. This is why the NDR philosophy is to use the weight of the evidence approach to investing. So I'll leave you with some key takeaways from today's discussion. First, emotions can cause an investor to take the wrong action. Beware of the crowd at extremes. Peaks and reversals in sentiment can often, but not always, identify opportunities or risks. NDR's breadth in data analysis allows us to assess and use market sentiment more effectively. Sentiment is only one piece of the puzzle in creating an investment strategy. Incorporate macro, fundamentals, and technicals as well. So finally, thank you for listening to my prepared remarks. As a reminder, Interactive Broker clients can sign up for a free trial of NDR's advisory publications in account management. And additional investment research can be found online at ndr.com. And you can follow us on Twitter. Our handle is @NDR_research, or on our LinkedIn page under Ned Davis Research. With that, I'll hand it back to Cynthia.
Well, thank you, Amy, and I'd like to take a couple of minutes right now. I'm going to grab the controls back for a moment, and I do want to remind you, if you've got any questions for Amy, remember there's that questions panel included in the control panel on the right-hand side of your screen. Add your questions there, and we'll try and get to them before we do part company this morning. Now, I do want to show you from the Interactive Brokers platform, you can access information on Ned Davis Research underneath our pricing menu. I've already got it open, so I'm going to bring you to this page where you can see some additional information about Ned Davis Research. Notice here, and I do want to point out, you'll see, if you are interested in subscribing, you'll need to do that through your account management or client portal program. Now, notice the instructions here will send you to client portal. Then on the menu on the left-hand side of your screen, go to settings and user settings, where you can subscribe to Ned Davis Research, as well as do keep in mind, we do have a 30-day free trial period if you're interested. Now, notice on this page here that we do give you an overview of Ned Davis Research, and then you'll also find a sample report is included at the very bottom of the screen. Notice here, by opening up that sample report, it does open it up in a PDF format, and here you can view the type of information that you will get from Ned Davis Research. So I did want to show you, here is where you can see a sample of the different reports that are available. Let me also go back to, let me see here. I'm going to go ahead and close this window out. Let me simply close that window and also show you that on here there is a way to access the Ned Davis Research website as well. So both of those are included, and you can find them underneath the pricing menu from the Interactive Brokers webpage. But I also do want to show you that they've been integrated into the Trader Workstation platform. I'm going to pull up TWS here, and notice that access to our research providers can be found underneath the New Window button. Notice here, you can go down into Analyst Research, and you'll see here the NDR advisory publications. So easily accessible directly within TWS. Notice how it does open the window up, and here you can find some additional information on any of the previous publications that they have put out. Now notice here, if you do want to, I'm just going to click on one item, and you'll see that from that menu in the Trader Workstation, you can come out and simply launch any of those reports here as well. So I did want to show you that that's available. Let me pull up the Trader Workstation one more time, because not only I've been showing you in Mosaic, but I do want you to see that in the classic version of TWS, you can still access that same information underneath the Analytical Tools report. Notice here, look for Analyst Research, and you'll be able to find NDR, Ned Davis Research Advisory Publications. So did want to show you that you have, once you do subscribe, you'll have access to these reports seamlessly integrated into the Trader Workstation. So with that, I do want to take this back over. I'm going to pass this back to Amy to see if there are any questions at this point that you can go ahead and address. So back to you, Amy.
Thank you, Cynthia. We will now begin the question and answer portion of today's webinar. First, I'd like to start with a common question we get at Ned Davis Research, which is, do we incorporate sentiment into our asset allocation model? The answer is a resounding yes. Our flagship global balanced account model, which uses a 55-35-10 benchmark, for instance, incorporates several sentiment indicators. First, it incorporates two composites, the NDR Daily Sentiment Trading Composite that we've discussed in today's presentation, as well as a global sentiment composite, which is an equal-weighted sentiment composite based on multiple global stock indices. Our global balanced account model also incorporates a relative valuation measure, the difference between the global earnings yield and the global aggregate bond yield. So look to see if we have additional questions on the question panel. As I'm kind of pulling up some of the questions here, please, if you have additional ones, go ahead and type them into the questions on the control panel. One of the questions we have here is, what are your composite sentiment indicators currently saying? Great question. Ned Davis actually personally writes a newsletter called the Institutional Hotline, and he publishes that 3 times per week at least. And on Wednesdays, he really goes through and reviews a lot of our sentiment analysis. So yesterday, he provided a sentiment update on stocks, bonds, gold, and crude oil. So I have that with me. After hitting excessive optimism on April 29th, he noted the NDR Daily Sentiment Trading Composite plunged to a near mirror image of just 16% bulls on June 3rd. His team ran a study and showed that when the composite is at 20% or less, the stock market's returns have been positive up to 6 months later. Bonds have finally gone to excessive optimism for the first time since 2016. And he notes that we'll be keeping an eye on this, because if it peaks and then starts to reverse, bond prices typically drop. In terms of the update on gold, he notes that gold finally hit extreme pessimism, and that actually supports our bullish outlook on gold. And finally, our crude poll hit extreme optimism at just over 63% bulls on April 25th. But crude oil prices in our poll fell sharply to just 41% on June 7th. And that supports our current neutral outlook on crude oil prices. Great, so looking at the questions panel, I have one here that is just following up from Cynthia noting the offering that we have on the Interactive Brokers platform. The question is, what is included in NDR's advisory publications offering? Well, first, let me just generally say the product offering provides our broad, objective market analysis, but it also provides implementation ideas. So the advisory publications service includes at least about 12 publications each week. So that's our daily economic commentary coming out of our U.S. economic team. We have weekly summaries that provide our global macroeconomic analysis, top-level analysis on global and U.S. asset allocation and trends within the U.S. stock market, and even U.S. sectors and industries. The advice, as I mentioned, includes actionable ideas. So there are 2 weekly commentaries that come out of our ETF team that really tie back to the overall investment strategy of the firm and also highlight trends that are going on within the ETF market. We also supplement that with monthly commentaries our flagship publication called Market Digest, the example that Cynthia pulled up on the product page, summarizes our key positions and themes in the marketplace. And finally, we have a quarterly benchmark focus that is an analysis discussing the themes among asset classes, styles, and sectors, and provides a lot of statistical analysis that can help advisors with their commentary to their clients and even help with their newsletter creation. So I have another question that says, do we have a track record of our recommendations? Yes, we do. That's something that I can follow up offline. It's not showing our model performance here through this particular webinar. So we really focus our recommendations on our overall strategist recommendations use the models as an anchor, and they have some other indicators that they can follow alongside that. But as I noted with the global balanced account model, we do incorporate several different sentiment indicators typically into our strategist recommendations. So I'll be able to follow up with you offline on that one. Another question is, what conditions exist when sentiment is of less value? Good question. I always say one of the things that we have noted as a firm is that with the growth in the ETF market and also just the growth of high frequency trading, that just looking at things like flows in and of itself is just one lens that may or may not be the correct direction of what the overall gauge of sentiment is. And that's why we really influence and focus on the concept of the weight of the evidence approach, even in our sentiment analysis, and why we've developed these composites over the years to really give that balanced approach and get the direction more accurate in terms of what overall sentiment is for a particular market. So as I'm just sort of looking at the panel here, just seeing if any additional questions are coming in, we'll just give it a minute or so. So it looks like we have no further questions at this time. So on behalf of NDR, thank you again very much for attending today's webinar, How Sentiment Can Impact Your Portfolio. And thanks to Interactive Brokers for hosting today's webinar. I'll now turn it back over to Cynthia for her closing remarks.
Well, Amy, I want to thank you very much for your presentation here today and remind everyone that we have been recording. And if you want to come back and review any of the concepts that Amy went through in today's session, you'll all be getting a direct link to today's recorded playback and access to these webinar notes as well. So with that, we will conclude our session here today. Much thanks to Ned Davis Research for today's presentation and to Amy Lubas for today's event. Also want to thank all of you for participating. You can all exit using the X in the upper right-hand corner of your screen. Have a great day, everyone, and do remember to always trade smart. Thanks all. Have a good one.